We know that this is pretty much a repeated event here in the U.S. We seem to go into the 11th hour every now and again. How high are the stakes this time around?
I think the stakes are really high this time around. Certainly, when we look at debt as a share of GDP, it's just under 100%. Ideally, you want to be at 70%. And certainly, we're going to get to 200% in about 30 years. Excuse me, in about 30 years. And so that's suggesting that markets might actually punish the US for having really outsized debt and for all the rancor that we're seeing in Congress in terms of not resolving this in a really good time.
Is there a real risk to US assets at this point?
Yes, there certainly is. If we have a sovereign debt rating downgrade by one or more of the rating agencies, that means you're going to see higher borrowing costs, lots of volatility, and certainly this time investors may really punish the US. And so that means higher borrowing costs for the government, certainly for the private sector. That means less investment, slower GDP, higher inflation, a very bad environment for the United States.
How hopeful are you that we will see a resolution this week? Because as Shery said, we've been to the brink before, right? This is kind of how the playbook goes. What makes it different this time for you?
Well, I think it's the rancor that we're seeing in Washington, D.C., where there's really not a willingness to compromise. And certainly, many of us are talking about, well, maybe there'll be like a temporary impasse where they kind of kick this down the road to September and match it up with funding the budget. And that'll give us a little bit more time over the summer to negotiate a deal. But it doesn't seem like that's really in the cards. And so it really does raise the risk that we might breach. And certainly when you look at a breach in the debt ceiling, you'd have a complete shutdown, almost probably every agency, and no spending for several weeks from the government. And that's going to cause a massive crisis, certainly as the U.S. is not going to be allowed to issue any debt. There'll be no activity, and that's really going to weigh on the economy. We're looking at, again, an instantaneous recession, also that feeds into the global economy.
The fact that he's talking about extending the debt limit hike, that he's ready to talk about the budget, could this lead to a prolonged standoff where you're going to end up talking about the 2024 budget, the debt ceiling, a larger battle, and in the meantime, so much uncertainty about the U.S. economy?
Sure, it's certainly possible that something short-lived is passed for the summer so that they can spend that time negotiating, talking, and it kind of runs up against the end of the fiscal year when we need to talk about how do we fund the government for the next year. So all of this could become a big mix of policy and challenges at the end of the fiscal year in September. But it certainly is constructive that we're hearing that there's still continued talks to address this, and that it's certainly from the administration that they are not looking to have a breach, and that they are open to different possibilities to avoid one.